CTM. What's going on, everyone? Happy Taco Tuesday. I'm so happy just realizing, queuing up Head Snack, that it is Taco Tuesday. I was going through a lot of our old videos, our specifically our CTM live sessions. Those were a lot of fun. We used to have a couple of thousand people live here in the morning. That was really during the Mania phase. And it was a great atmosphere. And I was going back through some of these videos, and like this one over here. The reason why was, hold on. Yeah, the reason why is I was looking at this video this morning, how to trade out of a bear market. July 20th, 2021. It is actually, before we even begin today, I spent the morning like preparing nonstop, as I always usually do, almost daily, for about 3 hours, ever since the kids went off to school. And like, there wasn't even a second to have my coffee. I have my, like, half of my coffee in my hand right now. I haven't even had a chance to take a sip. I just been putting together our work and our focus and preparing. And sometimes when I do that and I get so lost inside CTM like that, the presentation doesn't always come across the best. I hope that's not the case today, because it's probably one of the most important sessions to date. And there's been a lot of those over the last couple of months, ever since CTM 2.0 has been released. I'm curious for feedback. Andrew, by the way, I'm so sorry. I'm like 2 days behind in getting back to you in getting that access for you on the Conquer Trades website to help you to help me organize the course and things like that. And that's a high priority, but I feel like it's the substance of the course that's really worked in each and every day here. And that continues full steam ahead. Before we even get started, let me get this out of the way, right? And I just want to share this with you. This is the work that we did together, and it's as relevant a year ago as it is today. And I think it's very important. We're going to watch a couple of minutes here together. If this gets stopped out over here, first repair is still in play. Risk, very minimal. Always know your risk. This is a game of risk management, right? If we get stopped out over here, I don't know where price stops. I have no idea where price stops, whether or not we see some type of prolonged down leg and then further consolidation around 25,000 and then another down leg into 20,000. That could happen. Or if we see some type of capitulation, it's quick and then price shoots out of it. That could also happen. Or if we never take out this low over here, that could also happen, right? Those are the three situations that could happen. But I do know if I take out the low, the next thing I do is draw in this next line, this next trend line over there, and then I wait for price to break that. That will be the next entry. That low is the next stop, and then I have my risk, which is going to be very minimal compared to my upside potential, and that continues until the low is in. It is the best, most efficient way to trade out of a correction. And a bear market in Bitcoin, by the way, is only a correction. I actually like that tagline. And a bear market in Bitcoin, by the way, is only a correction. And the video gets into, I think I have it. That's what's next. The video gets into what it's like trading throughout, or how to trade out of the entire 2018 bear market on Bitcoin using that exact same technique. And it's still 100% absolutely relevant today. And probably this alone, it would be enough to really help people out there, because I see people are suffering, right? SS is saying it's hard to remain focused during the market downturn, right? So much to do, but not a great deal of enthusiasm to do it. You know, that was my first thought this morning, SS. And my first thought this morning was hours ago, was, you know what? This is a bear market, and you're supposed to be building during a bear market. And that's exactly what's taken place over here. There's a big difference going from expectations that I myself had, that almost everyone I know in this space had, to varying degrees, and then like that not materializing, right? And then like us, from moving from like January up, now's not even a time to dollar cost average. If you could build reserves, you should be building reserves for the foreseeable future because of the current Fed policy. And, fast forward now 5-6 months and well, that's materialized. I think it's a time to like step back in over here, begin dollar cost averaging again. I think that Bitcoin here, while it's unknown what happens next and how much longer. If you saw the tweet I put out this morning talking about, if we have a double dip recession, if we come if we come into recession in 2022 and come out of it by the end of the year, but go back into one in 2023, it's going to cause a lot of pain out there. Just want to prepare everyone. Hold on one second. Let me read off the tweet itself. Okay. 2023 could be even more pain with a double dip recession. If there's a rally in between, it could be very difficult to navigate for a lot of people. That's my worry. That's my concern. By the way, if I go back even one further to what we looked at yesterday when we were looking, thank goodness the mic is on. Mic check, mic check. This was so difficult, the current bear market that we're in, because we've taken out all these technical breakdowns without even having a relief rally. This was something at the beginning of the year, January, I was looking for a bounce, and it never even, like, after March SOMC, we got like a 2-week bounce or a 10-day bounce, and then it was sharply sold, and that's been it. And that's why it's been so brutal. It would be more brutal, I think, going forward if what we saw is now why everyone is rightfully so incredibly bearish, if there were some type of relief rally. And then at the top of the rally is when everyone who's bearish now and sells all the way up, they like flip bullish, in that danger zone. And they we'll go to new top, which we could go to new all-time highs. I have no crystal ball, but I do like to play out all different possibilities to prepare myself. And by the way, this is all just for fun. We execute on CTM 2.0. We're going to talk about that a lot in today's session. Anyway, let me boom. Jordan, that is so likely for a double dip with a rally in between. The Fed will be playing games to prop up the administration before election in November. I mean, and let's play the advocate here. If that doesn't happen and we continue going straight down throughout the summer and into the fall, it's going to be, look, that would be equally as brutal. And I imagine that people's attitudes and demeanor at that point would be pretty ugly. Someone on Twitter this morning was literally cursing at me and taking the Lord's name in vain with me, saying, "What is wrong with you that you don't short the market?" And I feel like each and every day we talk about all the possibilities that could be done, and you get to decide how you want to execute. Right? So people are very angry and twisted right now, and I imagine that could continue, especially if there's more pressure. But I do believe there's a strong possibility, or there's a possibility that we could have some type of relief rally. It could turn out that we went into a recession and we could come out of it. And if a lot of people who are bearish now and became bearish recently, right? They didn't become bearish in December, January. They became bearish in really into March as we, and if they come back up into this area, and at that point, that's where they flip with a bullish bias, and then we come back down again in 2023, and we take out these whatever 2022 lows there are, that would just be, people would get obliterated. I throw it out there because it's possible. That's all. A couple of things before I even get started today and forward. Thanks for being here today, everyone, for this session. Again, I miss the energy that used to be around in the space when everyone was in good spirits and good moves. But listen, the people that are going to be here tomorrow are the ones that are going to have the fortitude to continue to make good decisions to stay on the right side. So Alan P. Anyway, big shout out. Boom. Could that low projection of the trend line be casually prophetic? Jose, my bad. Are you still looking at this chart over here that we're looking at? I'm not sure. I got to be quicker on that. Fed said today, JL, I didn't even catch up. I'm so focused on the work that we do that's like all my focus. And I follow, obviously, price from afar. I saw Bitcoin off earlier this morning and now up about 1% on the day, while the equity markets are will get obliterated once again. I guess that was before the Fed. I had no idea. We saw Sol with a dollar sign asking, what did Powell say today? Was it hawkish or dovish? It wasn't even on my radar. I'll catch up with it later, but that's interesting to know that he said that they may stop by December, right before midterms. David, does using trend lines on the true trend tell us anything? Yes and no. Look, my own personal experience is I have experimented with it, but it's not something that I've ever adopted for more than each time I've looked at it to see if it was of interest. So look, maybe there's something there for you. David, trend lines on price work incredibly well. And then our CTMT 2.0 just works, the best I've ever seen. So let's keep going. Fed's, it's becoming quite political, and I guess it's always been, but more and more people are understanding that. And it's just interesting to note that, again, this was so hard because there was no bounce here ever. Once we broke this trend line, we came all the way down, and we did come down towards that $25,000 level, right in that area that I was projecting. Again, if you line this up from April top, this actually makes a little bit more sense, especially if perhaps that we are bottoming now. And when I say bottoming now, I mean, here's a look at the CME, which is going to be the next gap to be filled. Right now, it's almost 50-50 between the two of them. Another look down, over here. Let me come over to price on the candle so you could see. And, that would be closing that gap that we just looked at over here. We could even test as low as, the gap's closed at 23,500. We could even come back down over here and test bottom area of this channel. It's interesting that the channel that I'm using here for the adoption lifecycle model, that the COVID crisis, the dollar liquidity crisis, the global lockdowns, it pierces down below it to the outside, right? So look, we're coming to a point in time where we're going to find out whether or not what type of how correct this is, whether or not it is truly focusing it on the adoption of Bitcoin, and whether the adoption of Bitcoin is actually running the show here, or whether or not, because of the Federal Reserve and its policy and all that entails with the macro, if Bitcoin is more susceptible to that in the near term rather than going to do Bitcoin things. And it's fascinating and it's interesting, and I find it intellectually stimulating to be watching this all play out. I just did one thing this morning. Instead of, I'd moved this green box. This green box so far, it signifies the previous cycle all-time high to when price makes that new all-time high again. I just took it down from where the low is. The low also coincides with the lower log trend line channels down there. And I'm pushing it down towards $10,000. So that's an 85% drawdown. I mean, it's happened in the past. It could happen again. And then I'm just extending that out over here to not the 2024 halving. By the way, each time in the past, it's been after the halving that price has made that new all-time high. After the halving, price makes the new all-time high, and it's been coming into that halving event, which is now March 2024. That price is approximately 50% off. In one cycle it was 60% off, and in the 2012 cycle it was only 40% off. Does that mean that the closer it is to the all-time high at the time of halving, is that the stronger the bull market? Perhaps we'll see going forward. The box over here, the green box, by the way, that ends right over here on the model, where the model says that we should be making a new all-time high. It's at the end of 2023, November 2023. That is significant because it's before the halving event. And look, if something new is taking place, the 4-year cycle had been absolutely extraordinary. Like most people, I wish I would have had discovered it back down over here. It wasn't until the bottom of 2018 that I began using the 4-year cycle to front run price and the model. And it proved to be exceptionally well up until this point, end of the year, where it didn't work out as planned. And at that point, that, leaning into the 4-year cycle behavior at that point was mute. I wasn't going to do it anymore. Leaning into my traditional TA skills, do my best to stay on the right side of the market. And during that time, actually taking away less and less subjectivity and just drawing trend lines on price alone, the way that we do it. Again, getting into the refined, methodical way of doing it reduces risk and it improves potential return any way you look at it. Most people don't have the fortitude to be able to do it. I guess you first of all need to understand what would be worth, why it would be worth your time learning such a skill, and then actually deploying it. A lot of traders have trouble sticking to any type of strategy because they don't have a strategy that works. I think that's the single greatest point of failure for all investors in the market, is that since they don't have a strategy they know and understand, they just jump around from here to there, and that does not work out well. And that it's fascinating also just to see whether or not we got a big session ahead of us, and I wish I had all the time in the world to share with you. I couldn't believe this morning all that was getting accomplished, and sometimes it feels like you're in slow motion and you're not really making progress. But usually things go from like a plateau to like a big leg up, and that's how it works here with our own personal growth and everything we go through. And it's a large part of it is just showing up every day, putting the work in, and looking to continue to improve. Run DMC, I find it fascinating. To see which way it happens, whether or not we're actually able to make a new all-time high before the halving, and we're going to actually break this line before November 2023, or if we're going to break down below it. It's just as important either way. That's what people don't understand. It offers such an edge either way. So let me why I'm back looking at this all-important view right now, and just let me reiterate that now is an excellent time by my view. Now, you don't have to share my opinion at any time. You could even use my opinion to help firm up a firm or to disagree with mine. Affirm your own or disagree with mine. But I believe even if price comes down off 85%, right, that by the halving event, there's a good chance that price is 50% off the all-time high. That's roughly Bitcoin trading somewhere around, let's call it $32,000, $35,000. And you have between now and then March 2024 to be accumulating Bitcoin. That's why in January, when it was like, you know what, stop dollar cost averaging Bitcoin, and just if you can build up reserves. But once we broke down below this line, and it's just a trend line on a log chart, it signifies to me that if the adoption rate of Bitcoin is going to continue as it is, and we're looking at 1 billion users by sometime around 2024, price right now has, it's going to revert towards the mean. And the mean line I have is that green line over there. And not only do I expect price to revert towards that mean, as it always does, even when it gets away from it, it comes back down. There's been a couple of times that it's traded down below, right? And what's also super interesting to me, I'm just going to say it as we're looking at it, that, this angle of this line is 107.17 year over year, coming back from 2015. 107.17, that's the angle of this line. That happens to be very close to the adoption rate of Bitcoin. I think there's something there. It doesn't mean that you should take on unnecessary risks, and that Bitcoin is going to be, come January 1st, 2023 at $58,000, because that's what the model suggests the price should be. Not at all. But I wouldn't be surprised if it were, or even higher. I would not be surprised at all. And then we have that wild card ahead of us. It's all wild cards. Anyway, let's keep going. Jeffrey is wondering, well, how could the green line be the mean line? That doesn't make any sense because your Bitcoin spends most of its time above that, and that's right, Jeffrey. The correct use of the word mean would mean like what the average is. And I'm so sorry, that's not the correct terminology. What I use it at, why I call it the mean though, just so you understand me, is because I'm tracking the angle of that line, and you can see it's 107.17 year over year, right? And so I'm just drawing a trend line on the chart. That trend line also, it does happen to coincide with the current adoption rate, or pretty close to it. I think there must be a significance to that, and then so I just use that line, and the best guide that I could have about what future price expectations would be until the curve flattens, because once the adoption curve flattens, let's say it's around 2028, so then is going this curve. It's gonna go from S curve to flattening out to sustainable market. Something could happen that would cause Bitcoin then to, go on to another ultimate market opportunity phase. That could be like if all central banks were to adopt the Bitcoin standard, or something like that. But for the current, being in the early majority right now, for the current, let's say foreseeable future, until the adoption curve starts actually flattening her out, or until we get to about roughly 3 billion users, I expect this to continue. And just as we have now pulled away to the downside, I believe that's going to correct back up. And most of the time, I expect that price will be above that green line. But it's the mean line in that it generally always returns to it. And just let me show one last thing. And Jeffrey, these are just my views and my opinions. You could obviously think differently, right? And if you just look at that trend line and even extend it back 2 years over here to February, March 2013, and continue up, like every time price gets extended from it, it does return to the line. It gets extended, it returns to the line, right? It gets extended, it returns to the line. It gets extended, it returns to the line. I mean, it does not mean that it's going to continue like this, but unless something significantly changes with the overall adoption of Bitcoin, I imagine it does. Like a silly model with trend lines drawn on log scale. And what do I mean by that is if you're dollar cost averaging anytime underneath this line, you're good to go. And anytime it's above this line, you're either building up U.S. dollar reserves and or distributing, taking profit. But both of them are very strong ways to play it. And I think that's very important. The next time, the next bull run that occurs, and whether or not it occurs, like in first we break this line, and we'll probably then I assume, or what I would be using as a marker would then be that 2024 halving, and hoping that price is able to be approximately 15% off, 50% off that all-time high by March 2024 if we break down there. And if we don't break down beyond, I expect that, well, we're making a new all-time high but before the halving, and that's new and that's different. That's it. I think, by the way, this could potentially be really nasty, right? Can you imagine some type of relief rally that occurs into the end of the year, into the fall, and then that's when a lot of people buy into it, and then boom, the rug gets pulled in 2023, double dip recession. Maybe this is some type of easing, cutting of rates, and even QE, and the market doesn't buy into it. I'm not trying to predict what's going to happen. I'm just trying to mentally prepare everyone if we were to see some type of multi-year bear market. We've seen them before. It could happen again. It would only increase our position of strength regardless of the outcome and what happened. Or we could continue to see straight down, and it's been massively difficult because it has been a slow motion train wreck straight down, incredibly difficult bear market. And I imagine that going forward is going to continue to be difficult for a lot of people. I really miss the atmosphere that we had during these sessions. I'm trying to find something. How to trade out of a bear market. This one was so good. I'll play 2 minutes here. Bull market phase. But look at the pi cycle. Like the pi cycle over here, right? By the way, I'm looking to Bitcoin. I subscribe to their Patreon, I think it's called, so that I could use their pi cycle indicator on TradingView, right? It's done only on the daily time frame, and when I look at it, I use the Brave New Coin liquid index for Bitcoin. Now, I could show you also what it's like on the normal Bitstamp chart that I look at. And not only review it, Dave, this is just talking about the pi cycle here, but not only review it, I subscribe to look into Bitcoin's indicator so I could have it in case I wanted to use it. It was just at the time of the cross, I decided for me that I was not listening to that signal, but it was presented and giving for everyone to be able to do what they want. It was also interesting in this video or the other video, how to trade the line of repair. Hold on one second. Let me just, it must be right here. It shows us on our log charts, our log trend lines, and this is in January. This is not in July then. Well, I don't have it up here in front of me, but it's in like January, talking about when is this video? February. It's probably this video. It shows here we go. It says over here. Watch what it says. When we're coming into, but it looks to me around $70,000 for this particular. That's where we wound up peaking into the trend line, and look. It's hard to get it right, but the amount of work that we put in and the way that we cover things, I want to be free again to be able to explore, and I feel that being a public figure and putting my thoughts and opinions out there, that you're kind of muzzled, and it kind of changes the way that you're able to kind of express yourself because of feedback from others. And so that's my goal for 2022, to get back that freedom, that liberty, just to be able to look at markets and charts and be creative with them and focus on what my opinion is, and work within that range with CTM. Yeah, I imagine across the board that engagement's very low. So Alan P this morning sent a message, and he's like, Jordan, hold on one second. I'm not obviously not going to read a private message, but he's like, listen, evening, hope all is well. Just wanted to reach out. I've paused my CTM membership, from the end of the month. Alan P's been with CTM since like March 2020. He's like, nothing personal. I've ended all my paid memberships for now, as I've not had the time or energy to stick around to the Discord for some time. And we decided to stay in China for the foreseeable future. There's a lot going on, getting things organized. We'll keep in touch via DMM. I keep up with the stream each week. Value perspective. Cheers. I didn't even know Alan was still part of CTM because it's been so long that he's interacted with it. He's been, obviously, like he said, from afar following the live streams. And my response to him was, Alan, I had no idea you were even a member still. But please tell me what you think of CTM 2.0. Because when CTM 2.0 was launched in March, I reached out to Alan and I spoke with him. And I was like, Alan, listen, I really consider you a friend. And more than that, I have such respect for you. Please make sure that you watch what's going on here with CTM 2.0. You're going to greatly benefit from it. And so I'm interested to see what his response is. And I'm interested to other people out there, people that are plugged into CTM, what they're going through right now during this bear market. Because the truth is, if it's prolonged, if we're looking at a multi-year bear market correction, pain, double dip recession, whatever it might look like, people could be in a lot worse situation. It's very important during these times to be more right than ever, to work harder than ever, so that eventually, like I'm betting on mankind, I'm betting on humanity, I'm betting on the USA, I'm betting on Bitcoin, really, at the end of the day. First of all, we're not having any type of recovery till we break the lines. Oh, just a guy just gets neutral, he de-risks, and then he waits. Come on. Doesn't he know you could just sell and make money? Stock to flow, I don't really have such a good rendition of it. Let me try over here. So stock to flow, Zach, I think should be looked at. If you included all altcoins, then I think that there's a good case to be made that stock to flow was pretty accurate, right? Now it's confusing with stock to flow and stock to flow 2x and things like that. I used to love looking at how many days to the next halving, right? And it was in this blue period, right? Hold on. It's so turning from light blue to dark blue. So that is approximately, let's call that, 400 days until the next halving. March 2nd, 2024 minus 400 days equals oops. I don't even use Google anymore. I don't even have it like pre-populated. So how do you get to it? You could only go afterwards. I want to go, before. Here we go. Right there. I can't get it. Hold on one second. I'm with you all. I just need to figure this out. So March 2nd. July 2nd, 2023. No. There we go. January. It's not working. Could someone help me? What are we doing over here? I'm looking for 400 more days till March 2nd, 2024. I think we're getting close. I mean, we are getting close, but we might have another few months. Yeah? So we might have another few months. Interesting. Anyway. And anyway, this didn't provide, or did it, the top signal over there? Kind of. It's still interesting. So stock to flow, though. Look, if you were to add in the value of all the altcoins, the stable coins, and the cryptocurrency market, I think that there's a case to be made that it was actually a lot more accurate than not. And I also think that, personally, that Plan B, I've seen a lot of like real Bitcoiners who are so mad at Plan B for the stock to flow model, but at the same time, the stock to flow model has influenced an entire generation of hodlers. And the only reason that they even bought Bitcoin and began learning about Bitcoin and money and freedom was because of the stock to flow model. So I think it's a good thing. I'm grateful for it. But Plan B did actually include recently. So this is the 2-year moving average approaching 2-year realized price, blue. This is pretty interesting here, especially if you're viewing the all-time high not in November, but as April structurally. And you can see that every time this has turned blue, that has been the bottom. And I think when Plan B looks at Bitcoin right now, and he's saying to himself, well, structurally, we're at the bottom, and right now is a lifetime opportunity from a risk reward standpoint to buy Bitcoin. I mean, I agree. I am for the first time since like I don't know when in 2021, maybe the summer of 2021, like trying to make the bullish case of Bitcoin to no coiners, to people that I meet, and just talk about Bitcoin and money with, and because now is a good time. I remember when I did the video with Ben, I think that was done in October of 2021. I was saying in that interview that now is no longer a good time to buy Bitcoin. Like the risk to reward is not there. Like you've missed this bull run, but now is the time to be getting ready for the next bull run. And for a lot of people, even people that held over here, like, you know what? Dollar cost averaging until that next, I believe Bitcoin makes a new all-time high. Anyway, yeah, I mean, so that I guess that's weird in a way, or maybe I just don't understand it yet, and maybe that's because it was right, or maybe because I don't know. And the only one other thing I want to add about that is that I put out like this video early in 2019, in October, November 2019, and I was talking about what Bitcoin will do in the coming bull market. And I put in the title, it's not what I believed. I put in the title 55,000 to 135,000. And I had to use those numbers because Bitcoin was trading at $7,000-8,000, and no one would believe those numbers at that time. Even putting out 55 to 135,000, that seemed unrealistic to people. And ultimately, in that video, I come to the conclusion of $160,000 using diminishing returns. Now, obviously, that's not what happened. We didn't even make $160,000 diminishing returns. But I want to know, for my own just edification, what caused me to get to $55,000 as that target. It wasn't, here it is, Bitcoin halving price prediction 55,000 to 135,000, and at the end of the video I say $160,000 diminishing returns. But during this, I showed to like how I come to that 55. So I've always wanted to look back at that and say, hey, maybe was I correct, even though I was wrong, like, and just always looking to continue to learn, and that's it. So January 9th, 2000. That's really soon. That's really soon. And the one difference is, if we were looking at the top being over here in November, then that January 2023 Bitcoin making its low, it makes a lot of sense. Now, I'm looking at the new structure of Bitcoin, and it is different, and it's noticeably different, and we're experiencing a change. And that change, I guess, fits really well with this, and we'll see. I don't know, but obviously you all know where I lean, and that this makes the most sense to me, and that we're close to be putting on the bottom, because I'm following this model over here, which goes off the S-curve, which goes off the adoption. And if those two are not right, well, then it's not right, but that's where we are. Yeah, that's awesome. I agree. It is good news that, even if we see something different, and if we see Bitcoin making new all-time highs before the next halving, as this model suggests, at that point, we're looking, I don't know what even happens in the next cycle, or that it's even any more cycles, because the structure changed, things are changing, and again, I think we're getting close to jumping the chasm of facing reality in Bitcoin into that ultimate market opportunity, and that is good news. And right now, it's difficult for people to see it. And right now, you try to even have just discussions, and people get really people are very adamant in their opinions, I guess. Well, good session, CTM. Really good session. So what are your thoughts before we go today? I was thinking that maybe the correct format is to spend the next, let's call it 6 weeks, roughly, really solidifying, tightening up CTM 2.0, like the core side now. Now we have the substance, the core side, and then keeping that, and then just going back to like more of the spirit of the live streams we used to do. Like all this time been spent ironing it out, iron sharpens iron, working it out. Like, how is the best way to profit in the markets, and what is the best way for us to do that and have that now like really sparkly, shiny, and then like go back towards, because if you're executing on that each day, you don't need to like look at the chart together and be like, oh, well, we have no signal, we're waiting, and that, but we could talk about just like having fun and talking about things in the markets. So that's, kind of wondering. That's all. And I'll leave it at that for today. And just want to say thank you. Yeah, look, that's the stuff that I miss. If you imagine, again, it was sincerely starting at 7:30 this morning, up until we went live, hours of preparation, like didn't even finish my coffee, and then like trying to share it with all of you. But at the same time, that extra stuff that we talk about and this other things we talk, like that's where CTM happens. And I want to be free again. That's all. All right, everyone. Thanks for today.